Hi, and welcome to another daily recap. So today I'm going to recap day 84, and it's August 22, 2024. And today was heavily there was heavy red folder news which impacted both euro as well as US dollar. So this was the red folder chart, mainly screen capture that was taken from the Forex runway, and you can see that there were red folder news for euro as well as USD at all regular intervals. So if during any of these red folder news, if I hit my take profit or the price hit my stop loss, then my there would be a warning sign indicating that I have traded during the news by the platform that I traded. So I completely rejected the EU for today and I focused on GU as well as XAU. So let's jump into GU and see what the market had for me. And to summarize this video, uh, in both GU as well as in GU I got one loss, and in XAU mean in GU I didn't get any trades, whereas in XAU I got one losing trade. So I'll just explain you what how I lost the trade, and I'll also explain you why I didn't get any trades during GU. And also there was one trading opportunity in GU, but I didn't take it. I'll also explain it why. So quickly let's jump into the charts and look at the GU. So the GU, the you can see the bullish momentum started to kick in, and I think the price will only reverse after taking this buy side liquidity, this daily buy side liquidity. So the main target would be this buy side liquidity. So price 50, okay, uh, yeah, actually price didn't sweep the buy side liquidity. It is about to sweep. But still the price is in the daily supply and it has kept filling the orders. At any time, the supply can gain control and push the market down. So that is a very strong possibility for the supply to gain control and push the price down. So what I can do is I can look for the medium time frames and follow that order flow during the trading session. And this is 4-hour chart. The 4-hour is also heavily bullish, and this is the swing structure, swing was. So the swing low was this is a swing low, and swing high is set to be formed. So this is the current intentions that I'm dealing with, and you can see a strong rejection. uh, A strong rejection. This may indicate that the uh, supply may took control because the price is still in the daily supply level. The supply may took control, and there may be some selling pressure at least to fill this imbalance and tap into this 4-hour demand zone. I expected that that move today. Yeah, and and also you can see from the bullish perspective, you can see that the price started respecting the demand zones, so which means that this demand zone could also be respected. So for that, price needs to come down. So for two reasons, I'm going to take shorts because of this strong rejections, price can come down and even take out the strong internal low. And since the demand zones have been respected, I'm expecting the price to come down to respect this demand zone, and then it can either push up or flip this demand zone and then take out the strong internal low. Either way, shorts are high probability today. So jumping into the 1 hour chart, the 1 hour is also heavily bullish, and it has yet to make uh, the swing pullback. And this is the internal structure that I was dealing with. This is the internal structure. If I zoom in, you will get this one. So this is the internal structure, and the fractal structure is also bullish. Internal is also bullish, heavily bullish. So the only way that I could look for shorts is looking for a price to make a sweep zone. What does a sweep zone essentially mean is that the price to take the buy side liquidity and then push down using that buy side liquidity, indicating that the supply is in total control. And then I'll wait for the price to retrace to this freshly formed POI, look into lower time frame, and then take shots. So idea is very simple, but it may or may not happen. So that is the issue. So at 721, price took the first buy side liquidity. So I immediately set my my uh, alert just below these lows. So if the price takes out these stop losses, these liquidity and then pushes down, then from a freshly formed POI, I can look to shorts up to this H1 demand. So this was the 4 hour, the H1 internal high, and that was being taken here. And this is the 4 hour structure. Price again made a bullish fractal boss, but I am beginning to doubt whether this is signal to continue the bullish trend, or the price is making a fake move, trap the buyers and push the price. It could be possible because you can see the price didn't completely close above it; it just wicked it. So since there is a strong rejection, I could anticipate that the price can come down to take out the liquidity below, and it can eventually tap into this demand and either flip it or it can push up. So from naked eye, it can be see that it's a trap. It's a trap for to induce the buyers. Or sometimes this the demand zones like this could be respected and the price can go further up. So there is a 50-50 chance. So for me, I just play it conservatively. This is phase A2, and I actually decided to go with the order flow. Suppose if I took a loss, that's fine. I can look to short till the price gets into this demand. It's fine. Like it's okay to take a loss, knowing why you are losing, I mean, why you are losing the trade, than not getting into the trade, thinking of that you'll lose. So the first one will provoke learning about the market. The second one provokes fear of losing into your belief system. So that will compound itself, and in future you'll not be able to take even the high probability trades. So I'll suggest you to go with the first option. That's what I did here. So this demand zone is a very high probability demand zone because I tick all the boxes. So it has swept liquidity. There is a minute liquidity sweep, which you can see when you go into lower time frames or zoom a bit in the charts. And it has displacement. You can see the fair value gaps here. And it has made an internal break of structure on the upside. And it is unmitigated. It has inducements. Not here in the lower time frames. You can see price has moved up, pull back, and then pushed up. So this pullback maybe this is called leg inducement in M15. So in M15, there is a leg inducement, and it is formed during the kill zones, and it is stacked within the 4-hour supply, and it has also flipped this order block. So all the criteria is met, and also it's only this price not tracking off from the high time frame POI. This is the only criteria that is not being met because price is still in the daily supply. Remember, price is still in the daily supply, but is I'm trading with the H1 order flow and the high time frame also supporting the medium time frame idea because I told you in the daily that price can go further up to take out the daily buy side liquidity above the daily supply. So overall, it's intuitively it's medium probability for me, but in paper it is in the higher end of medium probability. And price actually chopped around for a bit, but it never came back. So it was almost 12:38. So, at 1:13:30 and at 14:43, there was a full news. So, if I don't get trades after 13:30, like then I decided not to trade this pair because immediately within 45 minutes, another Red Bull news will be there and the price will fluctuate. Either it will take out my stop loss or it will take profit. Any of the ways, I'll be breached. So, very simple analysis. So actually price formed a kind of LC2B, but this equalos was too far from my POI. So I decided to wait for price to take out this leg inducement before pushing up. And here is the risk factor. News to start within 50 minutes. As if the trade is not in the take profit region, then I would incur a loss as the price may sometimes consolidate before the news. And if that consolidation was within the stop loss region, that would be partial loss for me. So um, yeah, at this point, I already told you about the news. And in the 4-hour, I already told you this could be a liquidity trap because this was not a body closure in the 4-hour time frame. So in both the means, these are the two risk factors that was associated with this trade. The 13:30 news hit and the price tapped into the 4-hour supply, but because of that huge candle, single week, so I was not able to get into the trade. And yeah, this is one trade idea that I wanted to share with you. Uh, some people, including my mentor, uh, didn't expect the price to come down to make the pullback. All they expected was to continue the bullish order flow and take out this daily target. So this blue line is the daily target. So what they did is immediately once there is a weak break, they confirm that this is the bullish order flow has kicked in, and they look, and once there is, closure above, which is M15 closure, and this is it, the wick which was here. So what I waited, even I wanted to get longs, but I waited for this candle to finish printing. So once this candle finished printing, the next candle was here and it just shot up. So what my mentor did is, once immediately after this breakout structure, fractal breakout structure, he marked this VOI, and there was this lid here, and this wick actually took some M15 lid and he marked the stop order, and then he took the profit. So it's a very very aggressive trade, but I need to be more mature to take these kind of trades because I'm in chapter 5 or 6. He may be in chapter 50. So it depends. So that's one trade idea that I was about to share to you. So this is today's price action, and this I will discuss tomorrow. And for now, that's all about the GU. And let's jump into XAU, the most important part, the most interesting part, because here I took one trade and I lost it. And you know, this trade was highly, high probability, both intuitively as well as technically, because both my intuition told me it's a high probability, and technically, based on my rules, it was a high probability trade. But still, I lost the trade because the market changed structure. So, essentially, I'm a pullback trader waiting for a pullback and looking into the lower time frames and then entering the trade. Simple. Suppose I'm actually expecting the next run leg to be on, but if suppose the market changes its character, like from bullish to bearish, then uh, there is no chance that I can escape from that loss, especially if there is a lower time frame confirmation plus a change in, the change in character, then that those losses are inevitable. So let's analyze the daily chart. And yeah, the swing structure is bullish in the daily, and you can see the price has tapped into the daily demand. And anytime the price could shoot up and take out this weak crack high, or the price can change character and then push down to make a deeper internal pullback, tap into this deeper internal pullback, push up, or it can flip this demand and then push further down to fill these imbalances, make a deeper internal pullback, and then it can start to go up. So either way, but to keep it very simple, I'm gonna look to follow the bullish order flow in the daily until and unless there is a change of character in daily. So this is the 4-hour chart. Swing structure is bullish, internal is also bullish. This is the current internal range that I was dealing with. So price took a strong sell side liquidity here and then pushed up. So I expected, one second. Yeah, one thing is like, to react from something, there must be high time frame supply. Since there is no high time frame supply, I did not take any shots because that's the main criteria. Or you need to have a strong shift in the structure. For example, if there is a shift in the internal structure, then you can trade this internal structure and follow the to pay the swing pullback. But unless and until there is, uh, you see any of them, you can't play these shots. And you can say that this is a good POI where I can look for shots once the price sweeps all these price and liquidity. So if I jump into the H1 chart, sorry, this is the 4-hour chart, and a price is in the daily supply and took a ton of sell side liquidity, but there is a high chance the price could move up to take out the buy side liquidity and eventually take out the weak high. To be in the safer side, I'll follow the H1 order flow. The supply and took a ton of sell side liquidity. Yeah, actually, there is, I don't know why I wrote the second point. Okay, the longs are high probability today because price has swept this liquidity. Okay, fine. I wrote this point because there was this bearish stop. So I could look to play this bearish order flow, but I must keep in mind that price is in the daily demand and there is a ton of buy side liquidity and this weak internal, right? And the 4-hour structure, the 4-hour internal structure is actually bullish, and I'm in the discount prices of the 4-hour internal range. So all these combined, shorts are very much low probability and longs are very much high probability, provided I get a lower time frame confirmation. So this is H1, and you can see H1 internal structure is also bullish. The swing structure is also bullish. So I just decided to follow this phase A2 because it makes sense to follow the bullish order flow rather than expecting the price to reverse, right? So this price actually mitigated the extreme demand and then made a change in character. And okay, this demand actually swept liquidity, so price tapped into the demand, changed its character, and then it came into this demand. So I mean this demand change again it changed character. So the demand change is getting respected. You can see it right here. The demand change is being respected, which means the longs are very much high probability, provided I get one more bullish leg up. And one more thing is that, as I already told you, there is news at 13:30 at 14:45. So I can trade only the London first off, and I mean the London as well as the New York first off, and longs are high probability. And thus I'll wait for the price to make a bullish sweep zone, or at least continue the bullish order flow. That can give me the confidence to take longs following the medium term frame order flow. So there is a chalk right away, start of the session, but I didn't take it because I wanted the bullish run to continue during the session. So you can see the price versus sell side liquidity, and then price versus sell side liquidity tapped into this demand, chalk bullish, high probability narrative. So at 7:27, price made one more leg up, so I gained more confidence in this demand. So I marked this demand immediately. I set alert here for this demand. So these are the price A2 criteria. Price not reacting after high time frame PY. Yeah, in line with the medium time frame order flow. Yes, medium time frame PY. It is 4 by 8. Let's check it. Must have swept liquidity. Yeah, it's swept liquidity as displacement. Yeah, it has some kind of displacement, but not fair value gaps. So made a shift in the order flow. Yeah, it has made a shift in the order flow. Unmitigated. Yeah, it was unmitigated all the time. And yeah, it was formed during the kill zones, and it was not stacked with night time POI. And yeah, it did shift. It did, yeah, it just flipped this order block. So actually, two more boxes to be ticked. So 6 out of 8 criteria are met. So which is medium to higher end of uh, medium probability POI. So that is enough for me. I just need 4 out of 8 to satisfy this box, and I got satisfied. And also the medium time frame idea is being supported by the high time frame narrative. So high probability technically. And intuitively it's also high probability because I can see the demand change being respected and there is no supply to the left from which the price can react and change character. And also, Asian lows are taken. Obviously, the next target would be the Asian highs. And also, if you see in the 4-hour chart, this is a low resistance liquidity. The price can push up and take out those low resistance liquidity. And also, there is this area of supply which the supply and demand SMC traders would place shorts from, and above it would be the smart money liquidity. So price can take those smart money liquidity as well as take out weak internal high liquidity. So ton of confluence are there. So I just need the lower time frame confirmations to enter this model. So with this elongation, there is only one possibility. Either I can look for M15 LC2A or LC2B, or I can wait for uh, M15 confirmation entry. One more choice is that I can look for M15 LC1 using this as my lid. You can see here is a lid. What are the risk factors? The POI is not the best POI from the naked eye, but it satisfies many conditions, so we can say that it's a good POI. And in H1, it does not have any lit, right? And this was at 840. Price started to form a kind of ascending triangle pattern, which means that the price is accumulating liquidity on both down as well as the top. So if I get the manipulation on the downside, obviously the distribution would be on the upside. This is a typical KMD model. So let's not complicate it too much. So I just call this as pullback inducement because of this triangle, ascending triangle pattern. Suppose if the price takes out the sell side liquidity, then I can look to enter. That will be the candle which takes the sell side liquidity or the pullback inducement. I'll call that as NC, and I'll take buy stops from that candle. And technically speaking, it's called LC2B. LC2B not doesn't mean it should be equal lows. Uh, Sometimes it could be some patterns too. And yeah, price took the you know, LC2P, and I just placed the order. Boom, I just placed the order. But you know, the this candle low was broken by this candle low, and this candle low was broken by this candle low. So by the time all the candle flow were broken, London session was completed. So I had no other option to leave this trade intact, and I'll wait for some more confirmations. When I can wait for confirmation entry, which I can get during the New York, or which I may not get during the New York session. And exactly at 12 o'clock, I mean the price during London lull, the price made a bullish top in M15, which means now I have a confirmation entry with me, and also at 12, price almost tapped into this POI. So I just marked this one. I set buy limit order, and then that's it. I got tagged in at 12:04. All I need to do was to maintain composure and not do anything after. There was this candle. I got tagged there. This candle promised me that okay, the supply was weakening, the demand is going to gain control. But the next candle, I don't know what it was. She just came out and took all the sells a liquidity here. So that's it. That's the end of the world. And if I want to show you why I lost the trade, it's because the market has changed its character. Now this was a strong internal low, which was holding the price all the way, all day, all these days. But now that was been broken, which means that I can look to trade this bearish order flow till the price reaches some discount prices. So this analysis is for tomorrow. But anyway, just to show you, I just came up with this chart. So it is what it is. Since see, basically I am a pullback trader. So I'll enter during these pullbacks and then look to play the run legs. Enter in this pullback, look to play in this run legs. You can enter in this pullback, look to play the run leg. But suppose if the market wants to change character, it can change character. And now I can look to play the reverse one. So it's very simple. So losses are inevitable during these phases, and yeah, it's a very good loser. And I also marked the why it's a very good loser here. So that's it from both GU, EU, and XAU. In EU, I didn't get any. I mean, I was absent because of portfolio news from the start to the end, and GU, I didn't get any trades because price didn't tag me in. And in XAU, I got one losing trade because the market has changed its character. Okay, guys, that's it from today. So this is day 84. So see you tomorrow on day 85. Until then, cheers. Bye. Bye. Peace.